Good morning, traders, and welcome to Phoenix Blue's morning update. Today is Thursday, the 10th of November, 2016. My name is Nishil Patel. I'm going to give you a brief synopsis of what's happening on the markets, what's really played out on the markets as of last night, and how the markets have shifted into gear today. First things first, before we look at anything else, I just want to show which major announcements are out today. We don't have much. We've only got the USD unemployment claims coming later on this afternoon. So that's going to be later on afternoon during the European session. We have had the Governor Wheeler speaking after the rate cut last night on the New Zealand dollar. We did have a rate cut there, which is pretty much signaling the end of their easing policy, and that's really what's transpired. Right now, the cut has taken the rate down in New Zealand to 1.75%, so it's a 25 basis point cut there. But what we should really be looking at is what the new president of the United States has or the environment that he's created in the markets, and there has definitely been a seesaw effect, which I'm sure that all of you are very aware of. So let's go straight there. And what I would like to do is what we're having a look at right now is the euro. As we can see, off the back of the win from Trump yesterday, initially. As Trump was coming into power, and it looked more and more certain that Trump was going to win. No doubt that you would have heard this yesterday on our morning update, which was a little later than scheduled. Investors really did get spooked, and we saw a huge sell-off. And right now we're having a look at the euro, and we also saw this sell-off on the dollar as well. We saw the euro spike just above the 1.130 mark, and literally as soon as Trump had given his acceptance speech, the markets literally went quiet. First thing in the morning during European session, they went quiet. Straight after the speech, we started to see some dollar strength coming into play, and then after that, we really saw that whipsaw seesaw effect that you would have seen across the board in the marketplace. And no better place to see that than looking at this chart here on the euro. As we see right now, the euro is trading near the low of yesterday's bar, trading just above 1.09. So it's 0.916 right now, circa, coming down, hitting the low for yesterday's bar and staying very, very tight to it. What this is definitely showing us is that there is strength again in the dollar. And if we just flick over to this, dollar chart here, or this dollar index, I should say, we could see the true extent of that seesaw effect. We saw the dollar depreciate in value profoundly, taking out its lows that we had previously, and as we can see, the dollar hadn't been down anywhere close to this level. The last time it was down close to this level was back towards the tail end of September. I've got a low here of 95.84 on the dollar index before it spiked up, surged up, and took everything else with it. Not only did we see that in terms of the commodities and the currencies, but we also saw that on the stock markets, and really that was the first place where we were able to see investor appetite for risk come back onto the markets. As we saw, the Asian markets saw a huge sell-off. We're looking at the S&P 500 right now. But this is a true statement across the board on any index that we would have seen. So if I flick over to the FTSE here, you should see exactly the same thing as we see here by this long tail indicating on this daily time frame. But just going back to the the S&P 500 here, what we saw investor confidence depleted. Really, everyone running for the hills, selling off effectively. Huge sell-off. And then what we saw is we saw that appetite being returned. And if we go to a smaller time frame, and no doubt you guys should be able to see this if you go to that smaller time frame, what we would have seen is we would have seen that appreciation come back into play, and not only in investor confidence and investor confidence returning, but we also obviously saw that across the board on all of our markets. So people weren't as obviously not as scared, especially after the acceptance speech. I think the acceptance speech gave a certain or showed Trump in a slightly different light, showed his maturity as a businessman, which I think a lot of people had forgotten about. To the lead up to the elections, obviously everyone thought Trump was an erratic character, especially with some of the things that he was saying. But that acceptance speech gave a lot of people scope in terms of maybe he will be a lot better than we will presume he will be. He obviously is a very sound businessman. His understanding of business policy. And obviously his success in it has something to speaks in leaps and bounds itself. So maybe his policy change won't be as drastic, or maybe he will be a little more mature in his attitude towards certain policies that he's indicated in the lead up to the election. But that being said, right now, the confidence has returned back onto the market. We're seeing right now the S&P, as we see in pre-market trading levels, trading at 2176, far cry from the low 2000s that we saw it spike down to early yesterday. As we see just above that 2030 mark. So definitely huge moves on the market yesterday. But the good thing is what we are seeing is investor confidence returning back to the market, and we are seeing dollar strength across the board. What that means is obviously on those safe havens that everyone was assuming that we're going to see an increase, a huge increase in the price of gold. Obviously, with the dollar selling off, what we saw gold pretty much return back to its median average over the last few days. So if we just flick over to this daily time frame, that will give us a better representation. As we saw gold spike up and then literally come back down to where it started off. So that's indicated by this trend line, or this lower channel, this trend line on my chart here. Hovering just below that 1300 level, and right now we're still just below that 1300 level. We're at 1285 right now. Has come up and hit that high, or that 50% Fibonacci retracement calculated on this daily time frame. Right now, as I said, we've come up and hit that high there, which is corresponding to our 150-day exponential moving average here indicated on my chart. 1293 is the high for today so far. Has come off that high and bounced a little further back. We are seeing a lot of the currencies depreciate in value, of course, as the dollar is gaining the strength. But is this yet to continue? Now, we have to remember that the full inauguration of Donald Trump will be in January. But with the lead up to it, we do have an FOMC announcement coming in December. I think that is huge news, and that's something that the market's been looking forward to pretty much all of this year. And I think investors are tiptoeing around, thinking maybe it's still on the books, maybe it's not. There's from the polls that are coming out right now, many people are still thinking that it's on the books. But on the flip side of it, some polls are showing that the likelihood of it coming around is going to be quite low. Remember, there are many policies that need to be cleared up for us to have more stability in a global economy, of course, from Donald Trump attaining power. That's something that only time will tell. So I would be very, very careful in placing trades. In fact, us here at Phoenix Blue are going to be uber careful, especially this week, in the last couple of days of this week, before we create a prognosis for the week, for the up and coming week. And we will be basing it on our usual comprehensive theory of price action, fundamentals, and commitment of traders data. Now, guys, there are a few key concepts that you guys should pay attention to, and that really are the trade deals with the USA, in particularly the trade deal between Canada, the States, and Mexico, which is NAFTA, and because previously Donald Trump has said that that trade deal they will cancel. Also, there seems to be potentially some hostility with China and with Donald Trump trying to return jobs back to the manufacturing sector in the US. So there may be, and let's not forget, the Chinese are huge in terms of manufacturing and producing cheap goods, that a lot of people, not only in the States but globally, obviously buy. But Donald Trump has effectively said previously that he would like to create or bring those jobs back to the US and stop importing from China, which is a huge deal. I don't think something of that magnitude is going to transpire too well. Let's not forget the price of the goods that are coming out of China are considerably cheaper than what Americans would have to pay if it was produced in their own country. That's the first thing. And let's not forget that 60 cents in every dollar of American debt is actually owned by the Chinese themselves. So I don't know if Donald Trump has forgotten about that small factor. And that's another big one. As I said, there are a huge array of policies that we need to see if Donald Trump is going to follow through with. So please keep your ears to the floor in the run up to January, most certain. By all means, we will keep you updated with what's happening on the marketplace day to day on our free daily updates here at Phoenix Blue. So any questions, feel free to pop us an email to info@phoenixblue.co.uk and we'll be happy to help. Okay, guys, that's my morning update done. Until next time, happy trading. Goodbye.